Hello, hello, hello. Happy Monday, April 1st. April Fool's Day. Yay. Can't stand it. All right. Will the markets play a joke on people? We'll see. Hey, Sterling. Sorry, everyone. Not much news this morning. Why don't you do what the mainstream media does, Sterling, and just make something up? Just make something up and run with it. You don't need news. Just make up news. What else? Yeah, how is this useful? Needham raises target price to 850 from 600. Well, it's already traded above 950. So what? If it declines to 850, you're saying it hit my target? The analysts are a joke. They really are. And then what if it keeps going down? Oh, well, it hit our target. Now they'll start cutting on the way down. Good morning, Jacob. Good morning to everybody. Hope everyone had a wonderful weekend, a happy Easter weekend. Good morning, Patrick. Good morning, Mark. Good morning. There's Sterling with the good morning. Good morning, John. We will go take a look at NVIDIA Options 22. Welcome back. Didn't see you for a few days. Hello, Charles. Good morning, McRangers. Good morning, Anissa. Good morning, Legion Reaver. We're getting the whole crew in the house. All right, so we had a hawkish Powell. He was pretty hawkish, I thought. Pretty hawkish. I mean, for Powell, he was pretty hawkish on Friday. Remember, markets were closed. But Powell was a little hawkish. So we're going to have to see if that ripples into the markets this week. We got potential topping patterns, but they could get invalidated on another push higher. So you don't trade potential topping patterns. You wait till they are at least confirmed, if not triggered. We got the S&P Global Manufacturing coming out this morning. ISM, the more important number, in 54 minutes. Pay attention to that, especially prices. Prices are still forecast, the consensus to be roughly previous, but pay attention to the prices and employment components. Employment's already in contraction and prices are still in expansion. So that will be interesting. And the headline number is still in contraction, expected to still be in contraction. Then we got, that's the only real numbers coming out. So 15 minutes and 30 minutes after the cash open. And then we have the 3 and 6 months bill auctions and Cook speaking. Good morning, Daniel. Let's take a quick look. We got Red Book tomorrow, factory orders, and we got a lot of Fed speak tomorrow. We got at least 4 Fed speaks tomorrow. So we'll have to see what they say after the PCE numbers that were released on Friday. Wednesday, pay attention to the ISM numbers. And again, the S&P services and composite and the ISM, and then the crude numbers. And then we got, 4 more speakies from the Fed? Thursday, this is going to be week of big Fed speak. Week of Fed speak. April showers tank the market. We got jobless claims, and then 5 Fed speaks on Thursday and Friday. More Fed speaks and unemployment non-farm payrolls Friday. So between Fed speak, we got the ISM numbers, both services and manufacturing this week, and we have unemployment Friday. We'll see how. All right, who wants to put their bets in now? Number comes, last month gets revised lower, and this month comes in stronger than expected. Only to be revised lower again. It's Cynical Monday, everyone. Cynical Monday. S&P 500. You got mega caps, Amazon, Microsoft up a bit, NVIDIA trying to still just barely holding above that 62.5. Oil, strong. We've got some serious waning momentum, so I will be looking at the mega caps in case they start breaking out, but some of them look like they're poised for another breakdown, so I keep an eye on them even if you don't trade them. Let's just do a quick refresh here. Basic materials, we got gold. Gold's just, again, the rocket ship higher. Energy, crude trading gets some pretty key resistance in a potential rollover zone. We'll take a look at that. But again, it would be a minor pullback. Technology, but everything's positive today going in with the 1st of April. Fed watch still has 3 cuts. Now, I'm keeping an eye if June changes this week. from 60.35. Anybody who expects a double cut is smoking something. But let's see if this 35 number starts bouncing up. Fear and greed, still at the upper end of greed. Earnings, I mean, this is a really weak. I mean, we've wound down the first quarter earnings, but you got Dave & Buster's tomorrow after the close. Blackberry. Why are we even looking at that? What else? Anything else? Anything else? Bueller? Anything? No. I mean, there's really isn't. Conagra. Nothing that's going to be market moving, at least. So, remember, we're in the period with buyback window is closed. All right, what are we sitting here now looking at? So we do have a potential double top. We do have a potential double top in the S&P. Again, may never trigger against the daily rotation zone, so it's one of the lower probability ones. If it trades through 53.37.75, it's off the table. And remember, the trend is still up. The trend is up until it ends. And this would only be a minor pullback. And it would need a close below 52.63. The key area to watch for over the next couple days, if we don't make a new high on a closing basis, is 52.89.50. That's the 62.5 level. Closes below there, the probability shift to a retest of last Tuesday's lows. Low area, I should say. And then the possible trigger of the double top. Other than that, any pullback between 52.98.25 and 52.89 could just be simply a pullback to the daily rotation zone and the area that is most likely to bounce in. So, that's what we see. Going into the open, here's the key level right here. Pretty easy to spot. 53.10. We break below 53.10. We're looking at 53.03. 53.03 to 53.04. We break below that. Next target for me is 52.98. And then we have all the way potentially down to that 52.89 area. But anywhere again, 52.98 to 52.89, I will be watching for the larger bounce play unless we close below 52.89. On the upside, 53.25 is now our key resistance, and then has to get through 53.30, the harmonic and the little top area from the European Open, before I can shift from any choppy rally to a more sustained rally. And then I'd really be watching that 53.37.75 because that's the level that invalidates the potential double top. And then the level above there, 53.37 to 53.42 is the major harmonic level. The cup is half empty? Well, the cup might be fully empty, but people still think there's water in it. They probably bought that evaporated water. Yeah, California's fast food minimum wage goes to 20. How do you think that's going to work out? Minimum wage laws are the most inane thing because they actually hurt the people who most need those jobs. And if you don't understand that, reach out to me. NASDAQ. NASDAQ. Okay, no potential double in the NASDAQ. Did not hit that 75% harmonic. Broke above this little channel, but now we're trading back into it. The key levels. I'm just going to flip this around real quick to see this key little mine. This is minor because it's not overly extended, but it's trading right at the 50% harmonic, this 18,495. Look at where. Let me zoom in here. You got the daily rotation zone and 18,466. This is the key closing basis I will be focused on, 18,466. Anywhere between this 18,495 and 18,466, I'll be watching for some support. If we close below today, 18,466, then I'm watching for the potential retest of 18,400 area. And there is no double. So the next key area to me would be 18,337 to about 18,296, and then on a major closing basis, 18,270. That would then, if we triggered that level, I would be focused on this 18,000 area. To the upside, remember, we're running out of momentum. Each little push higher we've had over the last few weeks has been waning momentum. The mega caps aren't leading as much anymore. Really, that's that 18,466, 470 into the open is going to be very key on the NASDAQ. Cannot get overly bullish. I'd be in any rally up, I'd be in choppy mode unless it can sustain something above 18,621. The Dow does have a potential double top unless it trades against above 40,481. That's the key level. The key pullback level to watch for on a closing basis is 39,920. The trigger for the potential double top is a close below 39,657. That's all we need to look at there. The Russell, tried to push higher this morning. There was some strength in the Russell earlier, and then it just petered out. The major area, minor area is roughly about, here's where I'm looking, about 2142 area. But 2128 to 2118 is key on any pullback. Okay, especially this 2118 with the daily rotation zone, and that's the 62.5 from this last little push up. More important, if it continues to break down, is 2082.9. VIX elevated this morning. Now, this is also, we got the first of the month, but there's a little more risk creeping back in, and I'm going to be paying attention if it breaks below today's lows around this 1350. But if we start accelerating above 1375, I'm going to be watching for that more bearish pullback mode. DAX just continues to grind higher. This is not a good pattern from a stability point of view. Okay, this is it looks, hey, look, it just keeps grinding higher. That's the problem. It's got very little pullback area, and if this thing breaks, it could be sharp and sudden with the DAX. Very overbought, cycles at the top, and we don't even have a pausing bar. The last pausing bar was technically back on the 18th. Going to see if we can get a pausing bar today to even get the next key harmonic projections higher. Just keep an eye on this. This is a great area for, personally, that I'd be trailing a stop. Now, the notes, we have this little mini double. I mean, it's, you got the triple. It's getting sloppy. I'll still watch it if it closes below this 110.11.5 on today or tomorrow. Other than that, it's going to pretty much be off the table. That's just a minor pullback. Really, treat this one with a grain of salt right here. I'd be looking if it does. More so, you know what? Don't bother with it. It's a little too iffy in the probabilities. Really, if you start breaking down below this 110.11, same level, that's a 50% harmonic, and then we follow through this week below 110.07, then I would target the lows from between Monday, the 18th, and Tuesday, the 19th. Again, can't give specific trading advice, as everybody who knows here. Just trying to teach you what I am looking at. The yield, percent B buy, potentially. It already broke above Thursday's high. I'm now verifying that it's going to close above this level of Thursday's high, which is 4.228. All right, and then we've been asked again on stops. Well, what do I need is to follow through in the short term, a close above 4.281. Not today, but if this triggers, that's the next key level I'm watching for a follow through. Otherwise, if we start getting up there and roll over, got to be more aggressive, raising a stop from my perspective. Now, in the bigger picture, come on, there we go. We're in an upward sloping channel with an already triggered double bottom that has not been invalidated. So this is still in the direction of the medium-term trend after a short-term pullback. And we had hawkish Powell, but we'll see what the markets take away. 10-2s, nothing really to report. Dollar index also still strong, but we've hit that 87.5 and it's stalling out there. By the way, no potential double top, not reversing a big enough of a move, as verified by this. So I would just use your pullback harmonics if we start pulling back again. But overall, we still have this head and shoulders pattern that was pulled back and on the harmonic level was not invalidated. So I'm still watching unless we really start breaking below in the short term back below about 103.60, then I'll reassess. Crude coming up against this very key resistance area with cycles getting to a top. And it's in the rollover zone now. It would be a minor rollover for me unless something drastically changes with the patterns because there is no major pattern. I will be watching this week though, because anywhere between roughly this 81.50 and 84.80 is the rollover zone. To reload, it's been basing constantly higher, so I would not be looking to short crude anything besides a minor, very intraday pattern. Everything else would be looking for pullbacks and then a resumption higher. Gold, another big gap up. Now, gold is getting overbought, coming into a very strong, this 2297, 2300 is a very key harmonic area. From a long-term perspective, it's still in long-term buy mode from things I follow. From a shorter-term perspective, it is getting slightly toppy. So depending on your time frame, I know where your stops are. And if you're on the shorter time frame, if this stalls out somewhere above 2280 and a half again, you might have a little mini double. And that's just a minor pullback pattern. All right. The 10-year just basing on the yen, the yen just basing sideways. This is technically still a bullish breakout pattern, but nothing to do. Remember, that's risky because you could get yen intervention. Euro still has the price action favoring lower because of the close below the 62.5, so probabilities have shifted. 107.30 is the key target area. So that's why I've also watched keeping an eye on the dollar to the upside. Spiders in potential double top territory also, unless it trades above 525.54. The trigger for the potential double top needs a close below 518.40. In the short term, the key level to watch for this week on a closing basis, if it doesn't make new highs, 520.73. Today, I'm keeping an eye right here, 523. You can see that's the key support, trading 523.56. So the first level would be for the gap fill to Thursday, 523.12, and then 523 is major. We start breaking below 523. I'm looking at about 522.30, then 521.50. To the upside, sorry about that, I clicked too quickly. It really's got to start trading above 523.60 before I'm more interested in the bullish case. The Qs, no potential double. The key area to watch for this week on a closing basis, 438.97. In the short term, we pulled up into the 62.5 rotation, the possible topping area, could not get the close above it, moved back down. Key support is about 443.30. We start breaking below there, 442 and then 441. That's just the way the numbers work out. And then you're looking at 438.97. Can't, again, get bullish on the NASDAQ, at least intraday else. 445 is very major resistance. So it would have to sustain something above that before I'd be interested in the bullish case. Let's get to NVIDIA for options 22. You see here so far, what's the level? 888.91. We're trading 903. Now this is back into the key support zone unless we close, and I'd be watching for the daily close below 888.91. Okay, based off of Thursday's price action, you break above the high, it's technically could be a percent B buy. It would have to follow through with close. That would be a very aggressive one with waning momentum on this. It's really starting to lose momentum, so that would be one I'd manage closely if that were to trigger. Other than that, still the potential double top is still in play. Close below 841.66. Takes the topping pattern, and then we could see the bigger pullback on NVIDIA. We could probably see a pullback if that were to trigger closer to the bottom of the weekly rotation zone. Tesla should be reporting earnings. Still watching for the rollover play. Not earnings, deliveries. Sorry, first quarter deliveries. I misspoke. The earnings aren't projected till roughly the 17th of April. But I'm watching for rollover plays in here. But the key level on a closing basis, 169.41. Good morning, Richard. Petered out. No one says that anymore. Well, I say it. It's petered out. Oh, I guess I'm old. Yeah, here comes the layoffs. You'll order with your iPad. You're welcome, options 22. What else are we looking at? Let's just take a quick look at some stuff. Again, Tesla overall still, even if this bounces up with deliveries, it's still in the major bearish chart pattern. Meta, remember, closed below this minor trend line. We still have a little minor potential double top and a gap fill left behind. I'm keeping an eye now, specifically this week, at 476 on a closing basis. So if you're looking at mega caps, that's a key one to watch for. Apple is still barely holding this key support, but again, you start breaking below 168, we're still in a key triggered bearish pattern that we've just had a bounce play in. So that's it. Watch again, 168 with Apple. Google, we have a major potential double top, long way off. I mean, this could get invalidated. Also, we have a lopsided minor double top, and that would also trigger a potential gap fill. So I will be watching this 146 on a closing basis. 146.08 technically, but 146 just because look where the targets are. It's lopsided, but it's because you also get the gap fill magnet. I'm keeping a very close eye on that too. Microsoft, I mean, it's trading against very major support right now. Okay, very major support. If that breaks down and then you lose the 50, that's where I'd really start watching. If we get below 416 on closing basis with Microsoft, I keep a close eye on that. We already looked at NVIDIA. By the way, it's not a mega cap, but I'm watching Netflix, which has been strong for 2024, started to break down and got the close below the 50. So we'll be watching for some bounce play back into the rotation zone, but that could be setting up a more significant topping pattern against a very key harmonic area in Netflix. So I'll be watching that to see if that sets up a more significant topping pattern on any rally. All right, with a couple minutes to go into the open. That's a pretty bearish bar there on the 4-hour. No double on the 15-minute, but your key area to watch for into the open would be about roughly 53.16. And then if we trade below, remember we still have a gap left behind between Thursday and Sunday. So we start trading below this 53.08. Then the gap fill is right in front of this 53.03 area I listed before. So 53.03 to 53.04 is still the key support area. That's where we sit. Thank you, everyone, for tuning in. What else? What to check on NN? Sure, we'll check on NN. What is? I've never. Have I ever? I guess I've looked at this. I don't even remember it. I haven't looked at this in forever. What is this technology package software? Oh, okay. It's not one that I routinely look at. Lots of insider buying according to Sterling. I'd keep an eye if this does run out of momentum. Above, where's it? Uh-oh. We closed at 666. Short it. Just, that was a joke. I'd keep an eye if this pops above 695 and then rolls over again. Because this is running out of potential momentum in the short term. But it would just still be then a pullback into the rotation zone on the daily basis. And the major support, if this closes, especially on a weekly basis below 6, I'd watch out. Other than that, it would just be a potentially bullish pullback case. You're welcome, Anissa. Again, everybody let's just take a look at the tick. Let's take a look to see where the tick opened today. You good old ticky. Not a strong opening with the tick. Roughly 400. So if this starts pulling back, I'd really be watching this key low. Really pay attention. What did I get? Not Tesla. Ugh. Oh, see, we're trading right there now. I've been really watching to see then on this gap fill. Sunday night gap fill with the futures. 503 to 504. And see how we react there, especially if we get any more buying pressure coming in. Remember, we start losing this 5,300 area. Your key support zone is this 52.98 to 52.89. If you're looking to fine tune that, here's another little tip. Use these little reverse harmonics. See, I'd be watching for the cluster then to come in roughly 52.97 to 52.98. We break below there. My intermediate level would be 52.93, and then I look at this 52.89 level. But I need to see support, and we're so far, looks like we have a little minor double bottom there against the rotation zones, so that would only be for a small pop-up. With that, I am going to head off into the trading day, and I hope everyone has a wonderful, wonderful trading day and week. I'll see you back tomorrow. Bye for now.